Welcome to December, ladies and gentlemen. There is so much to be thankful for. We had a 4-day weekend. I hope you had a 4-day weekend anyway. I know I did. And we are now at that point where we're getting ready for Christmas. I see the lights out. We even got some stuff out of our rafters and ready to put them up, decorate, did some Black Friday shopping. And now, what's going to happen this week? Man, there's so much going on. We have had a volatile market year-round this whole year. But guess what? We are moving in the right direction as we head to that final stretch, all right? The checkered flag of 2025 is waving and we're racing towards it. Let's get into what's going to happen this first week because it is a market-moving week. Not much on Monday. We have a couple manufacturing reports. Fed Chair Powell is going to speak. Nothing on Tuesday. Wednesday, though, we have the ADP Private Sector Jobs Report. And this really has been the one report that we have seen month over month since the government shut down October. And this one is going to hold some weight. Will we see a negative number for job growth in the month of November? And then we also, on Thursday, will have initial and continuing jobless claims. And then Friday, we get the PCE, the Personal Consumption Expenditure Report. This is the Fed's favorite measure of inflation. So this week, we're getting a little taste of jobs and we're getting a little taste of inflation. And if jobs show a decrease in jobs, unemployment going up, wage growth stagnant, that's going to be a positive momentum driver pushing rates down. And then if inflation stays pretty much where it's been at, the core PCE was at 2.9%. If it stays there, good. If it goes lower, great. Expect even further decrease in interest rates. And where are rates at? Let's take a look. Conventional rates, as we start the week, we are at 6.2 to 6.5%. Really, a lot of it depends on the amount of your down payment, what type of home you're buying, and always your credit score. Let's take a look at VA. Now, normally I go over the 1 year mark, but we are at, and if you look at it, we are at 5.87, 5.88%, lowest we've been this year. Let's zoom out to really the last, let's say last 5 years. And what you can see is, man, rates are a lot higher than they were at the end of 2021. At the end of 2021, that was when we started to see interest rates go up. You can see that huge climb that we took all through 2022. And we saw interest rates go above to the high sixes. We even saw them eclipse 7% in 2023. And we have been kind of, if you draw a line that kind of goes around the mid, you can see interest rates are going down, not as fast as we would like, but they are going down. And quite frankly, I don't want them to drop like they went up. I want it to be steady. All right. And I think that's what we need to see is a steady decrease in interest rates. And let me tell you, if we see interest rates continue to drop, what we're going to see in 2026 is a complete game changer. We're going to see inventory drop. We're going to see people actually start to move because guess what? When interest rates, VA rates get into the mid fives, I tell you what, people get excited. People want to buy. People want to sell. People want to move. And I predict we will see in the springtime and as we head into the summer, the PCS, the post-school moving season, we are going to see activity pick up, not just in Hawaii, but all across the nation. All right, let me know what you think. Do you think that interest rates are going to continue to come down? Do you think 2026 is going to be that rebound year we've been looking for? Like, comment, subscribe. Let me know what you think. All right, have a great week and welcome to December.